WeBull stock ticker symbol BULL reported earnings after the bell, and we did see quite a reaction, the stock popping to as high as 6% in the after hours, pairing some of those gains, but still up 2% in the after hours after being up 1.59% today. And we're going to talk about WeBull and is it a buy right now. But before we dive in, if you guys please go ahead, like and subscribe. It really helps me out. Now, for those of you that don't know, WeBull is an online brokerage firm and financial services company that provides a trading platform for investors and traders in the retail segment to buy and sell various investment products, including stocks, ETFs, options, and cryptocurrency through its mobile app and desktop platform. And I am a WeBull user. In fact, I exclusively only use WeBull now for all of my trades, for crypto, for options, for everything. And I absolutely love the platform. I don't think I'll actually move. I love WeBull. I've tried every single platform except Robinhood because it's not in Australia, and I absolutely love WeBull. Now, what's very interesting about WeBull is there's actually no analyst estimate. So all I can really tell you is that revenue was up 131 million for the quarter, and EPS, this is the adjusted figure, came in at half a cent. And when I mean there's actually no analyst estimates, there's literally none. If you go to Koifin, right, you go to analyst estimates, actuals, and consensus, there's literally nothing here on the quarterly and even on an annual basis. Normally what happens is you'll see figures going out into the future. For example, let's go ahead and quickly just look at Apple, right? We pull up Apple on an annual basis. You'll be able to see numbers through 2029 once the data loads right here. In fact, you could probably go to like 2035. For Apple, they probably have figures out. Yeah, they go all the way to 2031, 2032. You could have a look at it on a quarterly basis, and they pull their data from S&P Global. So the fact that WeBull doesn't have any analyst estimates is very weird. In fact, I couldn't find estimates from an analyst for WeBull anywhere at all. So it's very weird they don't have that. However, we can still look at the quarter, and what we saw here in the quarterly report was some very encouraging stuff and some stuff that we don't want to see as well. Gross margins did decline. We'll talk about why that is the case, but still very high in the low 70s region. Adjusted net income and adjusted operating margin inflected this quarter, and this has been the case for the last couple of quarters. On an adjusted basis, the company is turning profitable. It's here right here, negative 1.7% and negative 0.3% to an 11.7 and 17.7% inflection. Absolutely insane. And that meant adjusted net income was 15.4 million and operating income was 23.3 million. And these were both in the negative in the previous quarter. Net of customer balances, the company has 476 million in cash, 113 million in debt, a very solid balance sheet. And this is the type of stuff you'd like to see. Now for the rest of this video, because we will be looking at the adjusted figures, the net income, operating income a little bit more, it's good to know what's included in it. So pretty much the adjusted figures exclude stock-based compensation, foreign currency transaction losses, and one-time transactions. And in this quarter, the company listed in April, so those expenses were included as one-time transactions. So all of those is what makes up the adjusted figure, or excluding all of those is what makes up the adjusted figures for net income and operating income. Now, looking at the GAAP figures, revenue was up 45%, operating expenses was up 36%, great operating leverage. And that is why we were able to see the adjusted figures move in the way they did, because the company is building very strong operating leverage. But if we break this down into a more granular fashion, you can have a look at this figure right here, brokerage and transaction costs. That is essentially cost of goods sold for brokerage companies like WeBull. And that went from 18 to 34 million. So almost an 80% increase, right? So that is why gross margins actually fell, because, quote, cost of goods sold actually increased more than revenue. And as a result, when that happens, gross margins will fall. But still very encouraging signs. But that's why it all ends on a GAAP basis, because you can see here that net losses attributed to the company was actually negative 28 million. And if you look at all of the dilution included in them going public with the SPAC, their preferreds, their warrants, their repurchased carrying value of their preferred shares, the company actually lost $500 million. So this is very dilutive to the entire base. And I think shares outstanding increased more than 100% on a year-over-year basis to account for this right here. You can also see that other expenses came in at 17 million. That's stuff like the interest on their debt, deferred revenue, etc. So for all intents and purposes, the company lost about 28 million, excluding all of this mumbo jumbo right here. And that's how we get the adjusted figure. You can see adjusted net income. They take the net loss attributed to the company, which is that 28 million figure I was showing you, and they add back stock-based compensation, foreign currency transaction losses, which is $5.7 million. That is crazy. They need to get that under control. I don't know why that is the case, what's going on with the hedging activities, but that is a massive amount. It was 1.5 million in the previous year. And then one-time transactions, they apparently didn't have any. And then equity offering costs of 10 million. And that's how you get that $15 million positive figure. And that's how you get that 0.05% adjusted net earnings per share. And so if you actually look at it from last year, a massive inflection. But again, this is the adjusted figure, so do take it with a grain of salt. But when you look at adjusted net income in aggregate, things are inflecting and moving in the right direction. From negative right here, we bounced and we're moving higher. And even though we did see a sequential decrease from the same quarter last year, we did see a massive improvement. Margins sitting at about 11% right now, but we've seen highs of about 18%, high teens margins on an adjusted basis. Very solid stuff. And I do think this company on an adjusted basis could probably see 35% margins in the very long term. Looking at equity notional volume, so just looking at the platform now, that was up 58% on a year-over-year basis. And I can speak to this. I've been buying a lot more on the WeBull platform. I've also been trading a lot more options on the WeBull platform, and that was also up 8% on a year-over-year basis. Registered users was up 18%, and funded accounts was up 9% on a year-over-year basis. And look at that retention rate, 97%. Very solid stuff, but actually declining from the 97-98% range we saw previously. But again, nothing to be concerned about right now. If this starts dropping probably below the 96% region, that's where things can get a little bit dicey. But this is telling you that there is still quite a bit of competition in the US, North America, and throughout with regards to WeBull, because, their quarterly retention rate is falling. Customer assets were up 64% on a year-over-year basis. I can attest to this. I use WeBull. I've been putting a lot of assets into my brokerage account. Net deposits was up 37% on a year-over-year basis. Very solid stuff. So you can see that the people on the platform are staying on the platform. They're engaging more and they're putting more of their wealth, their net worth, their hard-earned earnings into WeBull. And because we are in a bull market, you're going to see these metrics continue to soar as long as the stock markets and cryptocurrency continue to move higher. Now, the management team doesn't provide any type of guidance, but they do offer this like roadmap. You can see right here, WeBull Premium, there's 75,000 subscribers. They're ahead of their internal target of 100 subscribers by the end of the year. I am a WeBull Premium subscriber. They partnered with BlackRock to form portfolio strategies. They've also partnered with Kalshi for prediction markets. They've entered the crypto space in Australia as recent as just a couple of weeks ago. I'm actually in the process of moving all of my crypto assets into WeBull, and they're officially expanding into the Netherlands. And I'm assuming more jurisdictions are going to come as the year goes on. And they're officially launched in Latin America via migration of Mexican users from the Flink app. And WeBull acquired Flink in 2023 in November. So that's officially a go. Looking at the conference call, there's a couple of key highlights right here. Now, WeBull came out and said they remain focused on organic growth, but will pursue M&A opportunistically, especially for international and product expansion. They see significant growth in Canada, Latin America, and Europe, with the Canadian operations now a top trading platform in the country after launching in January 2024. They launched 50 crypto coins in the US this quarter, 240 in Brazil, and plan to add more coins and features, including staking, very interesting, as regulations allow, and marketing strategy evolution. WeBull's marketing approach now emphasizes higher quality customers and larger asset transfers rather than simply maximizing account members. That's very good. Remember, marketing spend is a big expense for a company like this, and they've been actually controlling their marketing spend as of late. If we go back to their SG&A costs, look here, marketing and branding, right? That was 33 million in the same quarter last year, and now 30 million. So that actually fell 10%. So they're still putting money into marketing, but they're targeting a more affluent customer. And that is why we're seeing metrics like net deposits increase significantly. The WeBull management team also said promotional strategies are customized by geography. For example, in the US, they reward asset transfers, while in other countries, they might use free share promotions. And this is what I got in Australia. Why? Because in most of the rest of the world, right, we still pay commissions for every single trade we take. I still pay like 55 cents per options contracts I enter and exit. I pay $3 commissions for non-ETF trades outside the US. So most of the rest of the world, we're still paying commissions. And so when you see something like this, it's actually really, really big. And I think I have 12 months free of no commissions on the WeBull app at the moment. Now, what is the thesis with WeBull? Why are you buying WeBull? And it's very, very simple. One of the big thesis is that baby boomers are about to go, rest in peace, baby boomers, and they're about to transfer their wealth to millennials, to Gen X, to Gen Alpha, to Gen Z, and WeBull is at the forefront of that. So WeBull is going to see, a multi-decade long influx of very consistent assets into its platform. And, legacy providers like Schwab, they're behind the curve. Innovators like WeBull who have a great app. I love using the WeBull app. It's amazing. It's absolutely incredible. Companies like Robinhood stand to benefit from this massive asset transfer that we're about to see in the next decade, 2 decades, and so on. However, WeBull is not cheap at all. They trade at a price to sales of 17 times. For reference, Robinhood trades at 25 times, but 17 times is a lot. S&P 500 trades at about 3.3 times on average. So WeBull is not cheap at all. Now, valuing WeBull is very, very tricky. So you know how we do it. We put on the trailing 12-month revenue right here, and that's going to grow to about $1.5 billion, growing at this growth rate, as you can see right here. Then we're using the adjusted net income margin. Now, there's no analyst estimates, so I'm predicting based on what Robinhood has done and other providers, what their adjusted net income margin is going to be. And I think by 2029, that's going to be about 32%, right? So look at a company that's going to do 1.5 billion in revenue, 492, call it 500 million in adjusted net income. Their current adjusted price to earnings is 121, and I'm saying their adjusted price to earnings is going to be 30 by 2029. If you can justify these assumptions, I don't think it's crazy. 32% margins with 20% growth in 2029. That deserves a 30 PE in my case. You then get the enterprise value of about $14 billion. Subtract the net debt and get the equity value and then divide by shares outstanding, which is growing about 5% sequentially every single year. And I do think that figure probably needs to be higher, but this is just the base case for now. If that happens, you're looking at a $24 stock price in 2029. Current stock price is 14, so that's about a 10% compounded annual return. Now, do I think these figures are going to pan out? Probably. I think there might actually be upside figures to the margins. Robinhood's current adjusted net income margin is 55%. So if we assume WeBull can get that by 2029, we're looking at about a 23% return, but that's the absolute bull case. I think ultimately what we do need to do is probably increase the shares outstanding to probably 8 or 7.5%, something like that. And that would decrease the projected return to about 8%. I think the revenue figures are pretty solid. I think the margin figures are pretty solid. And I think you can use 30 price to earnings. If you want to use the market multiple of 22, you can do that. But I think WeBull is a significantly better company than the average company in the S&P 500. So look, you're looking at about 8% return. The fair value is about $10 per share. So is WeBull a buy right now? I would say no. It's looking really, really pricey, really, really expensive. And what I would want to see is probably more quarters of execution from WeBull's management team before buying into this name. That being said, I use the platform and I love the platform. This is me. I literally day trade for a living. I'm an accountant for a living. I work in the financial sector and I love WeBull. It's my favorite platform to use, and I've used all of them except Robinhood because we don't have it in Australia. Now, looking at the technical charts here for WeBull, you can see that the stock has sort of put in a bottom here at this $10 range earlier on in the year, and it has since rallied to highs close to 20. We're sort of forming a very solid base right here at the $14 region. I do think that, let's say you got a long-term time horizon for WeBull, and if you believe management will continue executing, I think anything below this $14 range is probably very, very enticing to go ahead and target again, the $19, $20, 52-week highs for WeBull. But guys, if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.